limit your upside. Right, so what do I mean by that, guys? In my opinion, you've got to move away from using take profits. Now, you always have to use a stop loss. So what do I mean by that? If you're placing an order, there's really only one thing that you can control when you are day trading. All right, you can control where your stop loss is. But you really, guys, if you ever want to make money day trading, you cannot miss out on these large moves. You just can't. You've got to capture those big moves when they happen, and they're not going to happen very often, but when they do happen, you need to be on board if you want to make money day trading over time. And so if you set profit targets, if you act like you know exactly where the market's going to stop and turn around, guys, you don't. I can promise you from months and months and months of day trading, from a lot of experience, you don't know where the market's going to stop. And if you're limiting your upside, well, the math doesn't work out on that. All right, so let's talk about some of the specific patterns. So fair value gaps. Do I see the market like sometimes does it seem to react off of the fair value gaps the way that ICT says? Yeah, sometimes it does. I've passed prop firm evaluations on ICT's material. I have, for example, his concept of the breakaway gap, where the market quickly moves away from one level. I've seen that work a lot. So there are certain things where I do use his patterns, and I've noticed, hey, there seems to be something here. But guys, he's a salesman. He makes his money off of YouTube ad revenue. He made a lot of money off of his monthly mentorships, and I don't particularly think there's anything wrong with that. But I just don't want you to think that this guy is out there making all of his money day trading, because clearly he's not. Which is fine. I mean, guys, I really have nothing against people who sell courses or they want to run a business. It's not my job to say what he should or should not do to make money. But guys, day trading is a lot more simple than what you think. It's really, you need to just know a couple of basic patterns. Like, for example, does the market tend to like to visit the same price area twice, maybe 3 times before it makes a move? Yeah, like double tops, double bottoms. I like to call them 2 touches or 3 touches. Yeah, the market does seem to like to do that. The problem with ICT, I think, is it's just overcomplicated. And guys, trading is really as simple as if you can catch a nice move, you're going to make money. If you limit your downside and you unlimit your upside, meaning if you use stop losses, but you're able to hold on for those big winners when the market really makes a large move, you're going to make money. It's really as simple as that, guys. Trading is not as complicated as ICT makes it. It's not as complicated as your YouTube gurus are making it. It's really as simple as, can you limit your risk? Are you willing to take losses? Right? Are you willing to repeatedly take losses on the hopes that one of your trades is going to be a big winner? Are you willing to have a 20% strike rate? Are you willing to have a 30% strike rate? Guys, you can make money trading with a strike rate that is below 30%. Okay, do the math on that. You're stopped out 4 times, but the one time that you have a winner, it's a big runner. And that's what you have to do. In my opinion, from my experience, from trading for a while now, trying a lot of different systems, guys, ICT is not the only system that I tried. I read, I'm a very academic, guys. I'm very bookish. I love reading. I've always been sort of an academic type. And so I got into trading thinking that this would be the same thing as going to school. And it's not. It's really not. It's a different skill set. Guys, this game is all mental. Right. So what do I mean by that? It's so this is a book that I just picked up. It's called The Best Loser Wins by Tom Hugard, and I like Tom's work on trading psychology a lot. There's other good books on trading psychology. You don't know where the market's going, guys. Let me just be honest with you. You don't know where the market's going, but over time you will sort of visually get familiar with certain things. Like, you'll watch the market, and as it's forming, with more and more experience, you'll get a better idea of where the market probably is going, but you're not always going to be right, which is why you have to use a stop loss. I'm not fully on board with the idea that the market is completely random either. So just because I'm saying that, guys, ICT's notion that there's some magic algorithm driving the market is just okay, I'm just going to say it's not true. It's not true. Um, there's no magic algorithm, guys. There's high frequency trading algorithms. Now that's for certain. But those high frequency trading algorithms are just trying to make hundreds and hundreds, thousands of trades, and they're trying to capture very small moves, and they provide market liquidity, right? They're not, the high frequency trading algorithms are not trying to trade like a human would. A human being is going to hold on to a lot of trades for a long time, whereas high frequency trading algorithms are in and out of the market at a level that human beings really cannot. You can't compete with a high frequency trading algorithm. You just can't. So you don't want to compete in my opinion, you shouldn't be trying to compete with high frequency trading algorithms because it's not possible. Um, ICT makes trading too complicated. Guys, this is all up here. Trading is all mental. It's all mental, guys. It's 90% mental, 10% technical. You will learn over time that the market generally likes to visit the same sort of price levels multiple times. Okay, you will learn that generally the market moves the most in the pre-market, except for when there are earnings seasons or if there's an FOMC event. So one thing, again, I want to give ICT some credit. ICT says you need to watch your economic calendar, and I cannot agree with that more. You need to watch your economic calendar. You need to know when your FOMC minutes are. You cannot trade futures purely on the chart and not be aware of when there are earnings, or when there's a Fed interest rate decision, or if we have a new consumer price index or inflation print. You need to know when those things are happening, because that's when you expect the market's going to make a larger than average move. And so ICT is right about that. Now, all of ICT's different patterns, the order blocks, fair value gaps, breaker blocks, do they work? Well, sometimes they do. I've seen some of ICT's concepts, like sometimes it does. It's just it's too amorphous. It's not definite enough, and it overcomplicates things. Guys, you could really, and I hate saying this, you could almost day trade at random. So just take a buy or sell at random, and if you were good enough at just placing your stop losses and letting your winners run further than your losses, you would make money. And that's just trading at random. Recently, guys, the market has been virtually just going straight up. If I get on the daily chart, and so frankly, guys, for the most part, for the past couple months, if you're just holding a position long, you've made money. Now, that's our current market position. That's our current market sentiment. That doesn't mean that the market's going to continue just going straight up forever. In fact, I guarantee you that it won't.